Hey all, welcome to ShareTreck. This is Raj here, and this is my regular daily musings on the stock market. I'm going to form some more conclusion, update my thoughts, and see what I can do today. So with that said, let's get started. We'll start with the futures, and the futures are looking positive for Nasdaq with a gain of 0.40. So it's looking good so far. It's a very steep climb, looking scary at this point of time. We do have a cup and handle projection, and I'll talk about that when I do QQQ. Next, let's go into QQQ. And here we have the cup and handle pattern, and I'm thinking that probably our target of 493.44 may come into play. We just need to break through this resistance, and then I think we are in the all clear. You can see that the RSI is overextended, and you got the MACD, which is crossed over the signal line. And I think the quadruple witching, which is due on 15th, is the thing I'm waiting for. Once 15th is over, I'm going to look at what's the status of the market on Monday. And if we are above this line on Monday, then I'm getting in. And I'll be investing on select counters, which I think would be safe. And I'll have to watch the stocks on a hourly basis so that I can get out at the right time. Because when the fall does happen, it's going to be severe. So one has to be careful. We are at all-time highs. If you zoom out, you can see that we are at all-time highs. We are at all-time high, and this was the last all-time high. We are approaching that. And when we start going above this, we have to be absolutely sure. And in a way, if you look at the history of the market, it has been going up, 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 and up with momentary downturns, but it's generally been going up. So I think the upward bias is still there, but one has to be careful because the longer term investor doesn't have to worry about too many of these things. But people with a shorter horizon of 1 year or 2 year have to be careful. And day traders, of course, have to be absolutely careful because you can't leave your capital in the market for a long period of time. So as I said, I have a target here of 493.44. So with that, let's go on to VIX. VIX is coming closer to the bottom, but today its volatility has gone up, and we have to find out why. Right now, I think the momentum is low, but the MACD is moving towards the signal line, so it's indicating otherwise. We'll see what happens as the day goes by. S&P 500 is also approaching its all-time high. I'll show you the numbers here. So the all-time high is going to be 479.31. So SPY is reaching its all-time high. I'm using SPY as the proxy for S&P 500. And I think there's still room for S&P 500 to go up, SPY to go up. So I don't think there's a problem out here. But the rally is being driven by other stocks which had not participated in the rally before. The Magnificent Seven are definitely not contributing as much as they used to before. Dow Jones is doing perfectly well, and it has crossed over the all-time high. And now it's getting scary out here, especially in light of quadruple witching. So those who are in Dow Jones, they have to be careful, I suppose. US dollar index is falling because the yields are falling after the Fed speech. So that's going to mean that there'll be further falls in the dollar. Next, let's look at IWM. IWM is up, and it's not yet anywhere close to its all-time high, but IWM has got a huge assortment of stocks, and many of them may have some more time to run because they are all in the bottom. So there's plenty of scope for IWM to go up. At the same time, the volatility is likely to be high in IWM as compared to something like Nasdaq. So you have to be careful with IWM. US oil, which was going down, has started showing some signs of life out here, especially with the production cuts. And I think there will be some more production cuts if the oil prices do not go up, because it's the lifeline for the OPEC countries. And it will be difficult for Russia to cut any further, but Overall, if the price of oil goes up, it's good for the OPEC countries. And right now it's continuing to fall down, so they must be concerned. And we have a level of support out here at around 67.23. They have not come down to it. That's a strong support out there. The put call ratio has gone up to 1.374 pre-market, which indicates a kind of bearish outlook. So that's the change that we have seen since yesterday. Yesterday we were about neutral. So that's what has happened here. Now let's look at the companies in S&P 500, which are above that 20-day average. We are coming close to this resistance level, after which it usually drops. Historically, that is the level after which it has dropped, with very few instances where it's been able to go above that. So we are going to have a situation where we may test this resistance out here of 91.81, and right now we are at 89.66. So 89.66% of companies are in S&P 500 are above their 20-day average, and if you look at their 50-day average, we have around 89.06%. So everything has been stretched to a high level. RSI is also overbought, so I think something has to give. Next, let's go on to technology, established technology companies, and I would look at FNGU. Pre-market, it's gone up 1.97. This is looking healthy, but at the same time, it's looking scary. But we have a lot of room for FNGU to go before it can hit the all-time high. So I'll definitely look at buying FNGU once we are past the quadruple witching. Then we look at AAPL. Apple also is doing well, and pre-market it's up 0.12%. But I think the valuation of Apple is already stretched, and it will be difficult for it to go up further in the same pace. And next, let's look at Amazon. Amazon is also up 0.74 pre-market, as you can see here. So it seems to be doing well. And it has got room for going up further. Their cloud play is also there, and they're getting into robotics and AI. So all those things are good positives. And let's look at Google, which is up 0.57%. Google has got room to go up further, but all the controversies they had with their AI release and their loss in some court cases, all those things are piling up on Google, but still it's looking positive with room to grow. Meta is also doing very well with a gain of 0.37 pre-market, and QYLD is flat, 0.06%. That's almost 1 cent up. Pre-market it's up 17 cents, which is another 3 cents gain over that. So QYLD is also looking good out here. If I was to look at Microsoft, I think Microsoft is also gaining 0.23% pre-market, and there is a little bit of room for Microsoft to go up again. Everything is in favor of Microsoft. It's just that it has run up a lot. If you see how much it has gained, it's at all-time highs, almost close to all-time highs. So there's a bit of hesitancy out there. If you look at IBM still has got room to go up because it's not anywhere close to its all-time high. But at the same time, the raise is very steep. So one has to be careful, because when there's such a, what can I call this, a parabolic kind of raise, especially with extended RSI and extremely bullish MACD, the tendency for giving up those gains is there. So when it falls, it's likely to fall very sharply before bouncing back up again and then falling down again. So I think IBM looks a bit dangerous at this point of time to me. Next, coming on to genomics, and I'm going to look at all our genomic stocks out here. And let us start with Caribou Biosciences, which is up 2.47% this morning pre-market, and is starting to look good again, and it's still managing to stay above this diagonal line of support from the previous bear market. So it's on a superior bear channel. Momentum is also positive and above average, so that is good. And next, if you look at Gilead is also picking up very strongly, and RSI is overbought, so there could be a bit of sideways movement today. IMTX is also doing well. It has converted two resistances, one at 8.80 into support, and another one which was at 9.65 into support. So that's a big positive, and I can sense a cup and handle pattern out here, and probably I could draw out a target for how much it would go, but I think the target has already been achieved, because if we were to look at, I'm just going to draw this very roughly. So if we were to look at this being the bottom of the cup, and we come up to here, which is the neck, then if I clone this and pull it up, so we are already past the target, which was 9.76. So I think IMAX has realized the target, and we'll have to see what happens next if it forms any other pattern. Bio-Nano Genomics is gained 4.67% pre-market. Editas is doing extremely well. It has got the revenue from VRTX as well. Its pre-market gain is 3.56%, which is another 37 cents. So it's going to jump further today, looking good. Momentum is also above average, and MACD is moving towards signal line. It's all looking good there for Editas. ARKG, someone asked me if I can have a target price for ARKG. We had a target price last with the cup and handle pattern, and it was 28.41. That has been met and exceeded. Now I don't see any new signal out here. Let me look at the moving averages, exponential moving averages. So we have a golden cross here, which is a bullish sign. We have another golden cross here and here. So there's a lot of golden crosses. It's all bullish. And also our momentum is above average. MACD is also positive. So ARKG is looking positive. It has to break through the resistance at 29.96, and then it has to break through the resistance here at 30.14, which is the 200-day exponential moving average. It's a tall order for it to do that, but given the fact that CRISPR and others are doing well, which are constituents of ARKG, I'm hopeful that it's going to be positive. But right now I don't have a price target for it, because based on the limited knowledge I have of technical analysis, I can't find any indicators that I can use to say that so and so is the price target. Now that said, let's go and look at CRISPR Therapeutics. CRISPR has gained 3.13% pre-market, and it has got support. It has converted support from a resistance of 59.23. So I'm going to mark that as a support. It's a nice, smart bounce back. And have I told you guys that I closed out my covered call, and now I'm open to making a new covered call? I'm looking at all the premiums available, and I'll make my move, and I'll let you know what I have done. Today, 61.66 was a resistance, but prior to the market open, it's already at 63.08. So I'm going to convert this resistance at 61.66 into a support. And our next resistance seems to be this orange line that we have out here. It's the 20-day exponential moving average, which is sitting at 63.74. So that's our next resistance. And the resistance up after that is 64.35, which is the 9-day exponential moving average. And of course, we also have the resistance, which is going to be at 64.76, which is this diagonal line from the previous bull flag. So that's what I have. I'm going to adjust this line a little bit more and make it a broader flag. So we have a very strong resistance at 63.74. If we break through that, then we are looking good. That's how I would state that. And we are almost close to average momentum. We need just a little bit more push today, which is already coming thanks to the pre-market action. So I think CRISPR is looking good. PACB is also looking great. It's gained 1.81% pre-market after gaining 6.62% yesterday. So that's also looking good. It's on this superior bear channel, and if it proves us wrong and starts moving upward, I'll be very happy. We are very close to forming the first the second or third bullish pattern. So we have a golden cross here, another golden cross here. We might probably be looking another golden cross out here today. So that will all be positive. Momentum is also above average. MACD is also bullish. So PACB is looking good. Illumina is starting to be looking good. It's gained 2.62% pre-market, and momentum is also above average. There's still room for RSI before it gets overbought. So everything is looking good for Illumina. and it can gain further today. There is a little bit more room for it. NTLA is also doing well with a gain of 2.99%, and we have a lot of golden crosses, but there's also this death cross which was formed out here recently. So hopefully we are able to cancel that out later on today with the price action, because we already have 2.99% improvement above average momentum, and MACD trending towards the bullish side. So this is looking good. DNA is also showing some strength. It has gained 11 cents yesterday, and today in the pre-market trade it's already gained 3 cents. And momentum is just becoming above average, so DNA is starting to get some life. Beam Therapeutics is doing well, and it's gained 72 cents or 2.55% this morning. It's trying to re-enter into this pennant today, and it's crossed over. So it's starting to look good out here, but I would like to hold on until the MACD crosses over the signal line. Momentum is looking great. These are all overall market sentiments which are driving Beam and Allogene and everybody. Allogene is also positive today with 3 cents gain, which is 1.17%. Bluebird is again starting to inch upwards. It's moved to 3.39 pre-market with a gain of 35 cents, which is a smart gain of 11.51. Let us see what is the news. There is no news here, but I'm going to scan Google and see if there is any positive catalyst out here, if they got some deal or if they are a takeover target or whatever, because it's a very smart gain out here and really happy about it. Verve has gained 1.65% pre-market, looking very good on the charts. NVTA has gained 11.18% yesterday and gained 4.86% pre-market today, which amounts to around close to 3 cents. Momentum is also above average, so it's looking good. Vertex has jumped. Vertex has jumped 13.23% yesterday, and that's what gave me optimism yesterday for CRISPR, and we are seeing that already. But pre-market, it has dropped 2.26. So when there is such a huge jump, there is always some amount of profit taking. So that's what has happened. I wouldn't be too much worried about it. RSI also has to cool out. So I think there'll be a bit of horizontal movement and a little bit of a downward movement for the RSI to cool off, and then I think there'll be a movement upward again. Prime gained 16.25% yesterday, and pre-market there have been no trades, so it's still flat. So we don't know what's going to happen with Prime. And soon, friends, I'm going to cover another company called Tome, which I think is an important technology company, gene technology company. So please wait for that. And with this, what I want to do is I want to talk to you about a few things which are really confusing me. Let's first look at the fear and greed index. The fear and greed index is still going towards extreme greed. We have got more greedy, become more greedy than yesterday. So when everybody goes greedy, you have to be fearful. So that's the maxim that I am following. And after that, I want to show you the S&P heat map. So there is a whole lot of greens out here. The exceptions are Microsoft, Google didn't do that well, Meta didn't do that well, and NVIDIA didn't do that well. Amazon didn't do as well. Tesla, surprisingly, despite the huge recall, has managed to eke out a positive. And also, as I mentioned, Nasdaq 100 rebalancing is going to involve a huge purchase of Tesla and a huge sale of Microsoft, Apple, Google, and others. So I'm waiting for after the 15th, after the quadruple witching, when the rebalancing will take place. So that's my logic for waiting. And now I want to talk about something that confuses me. I'm going to show you two articles. This is an article from Morningstar, which is again a respected journal. It says Wall Street has discovered what's really driving US stocks higher in 2023. The explanation isn't as simple as one might expect. So if you read this, what they are saying is that those who have been trawling about for a more comprehensive explanation have found their answers by closely scrutinizing the balance sheets of the world's largest central bank, with a particular emphasis on the Fed. Here is what they found, that while the Fed has been paring back the size of its balance sheet, beneath the surface, central banks have boosted support for markets by allowing bank reserves to expand, increasing the amount of capital available to be deployed into markets and the economy. Historically, when this happens, securities prices rise even if their advance doesn't seem justified based on the strength of the economy or the outlook for corporate earnings. According to research firm from former Citigroup strategist Matt King, who now runs Satori High Insights, his own independent research shop. It is reserve changes that correlate best with markets. They are correlated to changes in equities and changes in credit spreads, and there is just enough of lag that it can't be that way around. So anyway, what he is saying is that liquidity is raising. So how is liquidity raising? So some investors might wonder how the Fed can simultaneously inject more liquidity into the financial system while reducing the size of its balance sheet. Yes, I'm wondering the same thing. It says, according to King, the fact that the Fed has reduced its bond holdings 7.8 trillion from 9 trillion. So you're looking at a reduction of 1.2 trillion from the peak. Instead of the Fed shrinking balance sheet, what really matters is how reserves in the US banking system have increased by 500 billion since January. But still, if you look at 1.2 trillion reduction from the market and add 500 billion to it, still we are billions of dollars tight. The Fed isn't alone in this. Instead of withdrawing $1 trillion in the liquidity after declaring war on inflation in 2022, the world's biggest central banks instead injected roughly an equivalent amount. So they are saying roughly around 1 trillion of liquidity has been injected by the world's biggest central banks. So we are talking about banks like People's Bank of China and Bank of Japan and European Central Bank. So that's what they are saying here. Now, I want to take you to another article. This again is coming from BIS, and this is also a very reputed source. And what they are saying here is that foreign currency credit, a key aspect of global liquidity, has undergone distinct phases. The first phase recorded by the BIS Global Liquidity Indicators 2003 to 09 featured soaring bank credit amid accommodative financial conditions in the run-up to GFC. The second phase, 2009 to 21, saw a shift towards bond markets and more dollar credit, especially to borrowers in emerging markets, on the back of tighter bank regulation and a loose monetary stance. Has the recent global surge in inflation and monetary tightening ushered in a new phase? Recent patterns point to a contraction in foreign currency credit, primarily in dollars and particularly in EMEs. And now here what they are saying in this table is global liquidity, markers and phases. So phase 3, 2021 to current, Q3 2021 to current. So they are saying global liquidity index is falling, global liquidity index growth is negative or slowing, and bond share is rising, dollar share is falling, emerging market is falling. So both of these don't seem to add out to me. I will have to read this further, but my policy is that when I'm not clear what the hell is happening, I wouldn't like greed to take over me, because greed can cause a lot of problems. So my two litmus test is I want QQQ to cross this resistance and then bounce back. It has to go up, come back down, test this and bounce back. That is one test I'm looking at. The other test I'm looking at is the quadruple witching. Let it get over and let the tea leaves fall where they may, and then we will see what happens. And the way I look at it is that I don't want to be greedy for lost profit opportunities. So even if the market starts to go parabolic afterwards, all I have to do is buy lesser shares at a higher rate and sell lesser shares at a higher rate in order to get profits. That's all the change that's going to be. I would rather have the money in hand at this point of time when I'm uncertain. And it's also a question of age profile, right? I'm going to be 60 soon, and I have to change my risk profile. If I was 35, I would have definitely jumped into this risk because I have a longer horizon of time frame and I have a higher risk appetite. But right now my risk appetites are low. So what I'm thinking for myself may not exactly be applicable to you. If you are in a younger demographic, your risk appetite is high and you could do a whole lot of other things in this situation. But for me, my risk appetite is less, and therefore I'm going to play it safe. I would like to hear from you guys. Put it in the comment section. What do you think? Are we going to reach the new cup and handle target for QQQ that I plotted? Or is this a head fake and that we are going to see a drop on quadruple witching day So that's point number one. Second thing I would like to talk about is the Grinch theory. So elsewhere I have seen this concept of a Grinch theory, which is that if the stock market falls for 3 days before Christmas and 3 days after Christmas, then the subsequent year does really good. And that's what happened for 2023. So if we go with that logic, and if we have really good Santa Claus rally this year, then which means that 2024 is not going to be good. So keep that theory also in mind. It has been backed up with data. So if you have the data source, I couldn't find the data source anywhere. I'm trying to validate that. And if I get it, I'll put it on the channel. So if you find the data source of 3 days before Christmas and 3 days after Christmas for the last 15 or 20 years, and compare that to what happened in the following year, whether there was a net gain or a net loss, you'll have the answers there to validate it. I'm searching for it. If I find it, I'll put it in the channel. Well, friends, that's all from me for now. Thanks and have a great day. Happy hunting in the market. Bye for now.